Hello and welcome back everyone to this weekly update on the financial markets. My name is Jens from CJ Capital, and like every weekend I want to give you a broad update about the financial markets, beginning with the S&P 500 index, US oil, gold and Bitcoin against the US dollar. We will also have a look at my complete watch list right now with a couple of single stocks, indices and crypto. We will have a look at all my open trades and also the trades that are or setups that are pending and could get activated the upcoming days and weeks. We will have a look at the weekly, daily and 4-hour time frame to analyze price via price action. And without further ado, let's start directly in with the S&P 500 index on the weekly time frame. The S&P 500 index on a weekly time frame is printing higher highs followed by higher lows, at the moment near a new all-time high. I marked it with a question mark because we nearly reached the first Fibonacci extension level. MACD is seeming to cross the next couple of days to the downside, and we are about to lose this 10-week moving average. So the top could be in play, but let's have a look at the daily time frame. On the daily time frame, you can see that the price broke out of this bullish uptrending price channel to the downside with a big engulfing red candle, news driven. Since then we recovered to the breakout level, retesting at the moment the 10-day moving average, and I think the chance is there. If we see the breakout below the prior low, we will see a continuation move to the downside, which is well overdue. You can see we have seen a long time MACD divergence, price is rising, MACD indicator is falling, normally ends in a corrective move, and that's also still okay after such a nice bullish move to the upper side that the price action has to cool a little bit off. We have to see a correction, shake out some of the weak or leveraged hands, and then continue the overall uptrend to the upper side in a bullish end of the year probably. In the 4-hour time frame, you can see it just in more detail. We have here the support zone. I think that's the one holding us back from breaking lower. I installed a short position, a small one with 1% of my capital at risk. If we see the entry getting triggered below this 4-hour support zone, and I would probably soon start to take profits from the table. So maybe at the 0.382 Fibonacci retracement, I would take 50% of the table, so take the trade risk free, and then probably at 0.618 or the prior all-time high level, the last major all-time high level, I would close the complete position. If we see a movement that goes all the way back down, it's more a hedging position, so I have a lot of long positions here. Only long at the moment, nothing short. So if the broader market falls, probably 1 or 2 stop losses will get hit, and then I can compensate that one with this here. But overall, I'm pretty bullish. Short-term correction is probably in front of the door. That's all I have for the S&P 500 index. Next in the list is US oil. Crude oil on the weekly time frame, we can see a red monthly downward line. That one got broken to the upper side, and since then we're moving in A, B, C corrective move on the weekly time frame. All price action below this orange weekly downtrend line until we see that one broken to the upper side with a close above that one. We will probably see falling prices. But we are approaching right now the prior lowest point of this ABC correction. So we will see if we take it out to the lower side. Let's have a look at the daily time frame. It's definitely possible that we'll build here a double bottom scenario, and from there starting to rise. That could get interesting for us as traders, because we could then trade at the bounce if we see that we are starting to see a downtrend moving into an uptrend. So not printing lower lows and lower highs, but instead higher highs and higher lows. And then we could trade maybe a breakout. Could look like this one. If you want more confirmation, like I said on the weekly, wait for the weekly orange downtrend to break and get in the move, the corrective move afterwards. That would be the early entry, that would be the scalping entry, and that would be the conservative entry. I will decide after seeing the price action what I want to do, and I will inform you like always in my next video. So subscribe to the channel if you haven't yet. But so far the price action is bearish, not bullish. We haven't seen the bottom yet. On the 4-hour time frame I was still able to draw a blue dotted downtrend line, still intact, not broken, and till that one isn't broken, we don't have to think about getting long. What about going short? I think the price is well too low to go short now, because the next logical support zone are this prior to lows here, and the distance ain't far away. And I'm not trading only intraday moves. I'm a swing trader, not a day trader. Yeah, that's all I have at the moment for US oil. Next, gold on the list. Gold measured in USD. Yeah, that one went pretty well. We had a couple of times struggle to get above this weekly resistance zone here, but once we have seen the break to the upper side, what followed was higher highs and higher lows. So an absolute intact uptrend. I think the hugest decline was something above 10%. Yeah, 10.8% decline. That's nothing for just such a volatile asset. So a nice bullish parabolic move to the upper side. Indicators are stretched as hell, but they can stretch even further if you see movements like this one here. But I wouldn't consider to get in a long position right now. First, what you want to see is a corrective movement. We are right now on the daily time frame. Every daily uptrend is still in check and not broken. This triangle formation was my last trade after seeing the breakout to the upper side. Was taking profits a little bit early, slightly below the $4,000 mark, and then it was running up a couple of $100 more, but that's the game. I was happy with that. I profited in roughly $5,000 or 5% of my trading capital, and that was enough for me. Then the speculative players came in and pushed it even higher, or maybe some short squeezes that are not like me only taking profits from the table, but betting against dollar because they think against gold because they thought it would have been too overpriced and should fall, and it wasn't. The 4-hour time frame, we can see the first major corrective move in the latest uptrend here. So that could well be the changing point in this uptrend that we'll see from here on, and change from an uptrend to a downtrend. But yeah, the latest 4-hour uptrend is still intact, and once that one gets broken, a corrective move is in the cards. Still not willing to short that one. I would more think then about finding the bottom of the movement and then getting in if we see something like that. So a nice corrective move, finding bottom formation, changing from lower lows and lower highs to higher highs and higher lows, break of a downtrend, and then get into this corrective move afterwards. That would be my trading style on the swing trading front. And yeah, and I would for sure inform you if that one happens and I find something interesting in the market that's tradable, at least for my trading style. That's all I have at the moment for gold. Take profits if you haven't yet, or make research by yourself, because it's your money and you have to know what you do with that. Next on the list, Bitcoin. Bitcoin against the US dollar on the weekly time frame. We can see, like in the S&P 500 index, an intact weekly uptrend. Higher high followed by higher lows. We are at the moment at near an all-time high territory, even if it don't look the way if we get to the daily and 4-hour time frame. Then everyone is panicking right now, but on the weekly it looks still fine. We have a MACD divergence. MACD is making lower highs while price was making higher highs. A bit concerning after the fact that we touched the first Fibonacci extension level. $125,000 per coin was already reached, a slightly higher high. Then we have seen the collapse to the downside. Was news driven. We have here massive candlesticks sticking out of this formation, so probably that the probability that this support zone holds is still there. And yeah, my entry level, which was initially lower, went higher after trailing in more capital. Stop loss is well below this weekly uptrend line, risking nearly $2,000 with this position. I have no concern or no willingness to close this trade if we not see a break below this weekly uptrend line. I think everything above that could lead to new all-time highs till the end to this cycle. And yeah, if we see a break below this weekly uptrend, that would be pretty concerning and would probably mean that the all-time high for this cycle is already in. And if that would be the case, I would get stopped out. That would be pretty sad, but that's the game. Control the risk and maximize the profits, because everything else on the lower time frames is psychologically exhausting. And yeah, we are willing to master our mind and stay in these positions if possible. On the daily time frame, you can see the support and resistance zones. Yeah, I went here long the first time after seeing this downtrend, and stop loss was below the lowest point of this movement. Since then we have seen rising prices. Once we have ended this ABC corrective move and broke out to new all-time highs, I enlarged my position. Because of that, my entry level got higher and my stop loss level also. The moment $1,600 in profit. And yeah, we have seen new all-time highs. A couple of these ones was just a couple of days ago, if you will. So, and then we have collapsed, news driven. We also got below this daily uptrend line, which is a bit concerning, but at the moment price holds well at the 200 moving average, which is a supported important indicator. And as long that one, the daily support zone plus the lowest points of these two candlesticks are holding, I think we will see from here on new all-time highs and not the test of this weekly uptrend line. If we fall below that, that one gets pretty likely. So yeah, I'm hopeful that we will find a bottom and support here and continue rising and then exceed this sideways range to the upper side, which was leading in the past to a pretty nice uptrends. And we would probably meet my profit target slightly below the $145,000 level, would bake in me $7,000 in profit, or around 7% in my account balance. On the forward time frame, there's not really much more to say. In the shorter term downtrend, which is drawn in here with this 4-hour blue dotted downtrend line, we have lower lows followed by lower highs. And yeah, maybe we will see here the bottom and get above this downtrend and continue then higher, but we will see. That have been my 4 major assets. What now follows next are my watch list, single stocks, etc. A.O. Smith Corporation, 3 similar scenarios, 3 similar outcomes, hopefully. Yeah, I was entering after getting above this downtrend. We have seen the corrective move, break of the corrective move to the upper side, followed by the 200 moving average. I went long, risk reward ratio 2 to 2.4, risking $605 or 0.5% of my account balance to make roughly 1.5% of my account balance. Staying with this take profit far below the prior all-time highs. I backtested Netflix on special behavior. I can make a video if you want me to in the future. Drop a comment in the comment section if you want to. What I noticed is that we have here a MACD divergence across of the MACD to the upper side. We have a downtrend for our line, and once we see a break above this ABC pattern, point B, I'm willing to get in a long position, risking 0.5% of my account balance, stop loss below the lowest point of this ABC corrective move, and take profit would be 2-to-1 risk reward ratio, staying below the secondary Fibonacci extension level. Next, Investor AB. Investor AB, that stock is long-term uptrending. We had 200 moving average as support, and we had massive collapse, sideways movement, but printing higher lows. We had a resistance zone here with this highs that haven't been able to break higher. 200 moving average was resistance. Now that we finally broke above that, it turns support. I end up in a long position, risking again 0.5%, placed below the last major low here, aiming for 2-to-1 risk reward ratio, staying below the first Fibonacci extension level. And yeah, that's the trade. Next, Berkshire Hathaway. Berkshire Hathaway Inc. You all know that stock. Long-term uptrending. We had uptrending price channel, break below. We got support at this daily white solid uptrend line. We lost the 200 moving average, and after a break above this downtrend, we got above it again, found support at the 200 moving average, and since then we are surrounding my entry level, so minimal profit right now. And yeah, I'm expecting that one to continue in the future. Stop loss 0.5% of the account balance below the lowest point of this downtrend. Take profit, conservative, below the upper side of this price channel, aiming for 2-to-1 risk reward ratio. Next, Snap-on Incorporated. Snap-on Incorporated, on the daily time frame, we can see we are in a nice uptrend with pauses in between, and every break to the upper side was a nice opportunity to get long. We have here a white solid daily downtrend line. That one got broken to the upper side. We have taken out the prior high here of the secondary uptrend movement. That was the moment to get in a long position. 200 moving average is support. I placed my stop loss convenient below this daily support zone, and also below the 200 moving average, and probably soon the weekly uptrend line. I'm expecting to continue that one to the upper side at the moment in slight loss with this position, risking 0.5%, again aiming for 2-to-1 risk reward ratio and staying with that below the first Fibonacci extension level. Next, CrowdStrike. CrowdStrike Holdings is an uptrending stock with huge volatility in between. We had a couple of major declines like in this one here. Then we found a bottom perfectly at the 200 moving average. We had a spike to the upper side and a corrective move again lower. The moment we got above that one, I used for an entry. Stop loss below the lowest point of this movement and below the 200 moving average and this daily support zone. In nice profit already, but I'm aiming for 2-to-1 risk reward ratio, staying with that below the first Fibonacci extension level. And yeah, if we see a break into new all-time high territory, I will probably move my stop loss to my entry level and take the trade risk-free with that one. Next, Alibaba. Alibaba Group Holdings had a hard time, 80% drop, then a long-lasting bottom formation, but once we got above this major weekly support and resistance zone, I thought about getting long. Then we have seen another corrective move to the 200 moving average, and once we have seen the second push above the level, I entered a long position, place the stop loss below the 200 moving average and aiming for a 2-to-1 risk reward ratio with take profit target staying below the next weekly resistance zone. At the moment, a slight corrective move, still a good profit. Once we get above the prior high here, I will also move here my stop loss to my entry level to take the trade risk free, but then we are probably also soon in my take profit target, risking again 0.5% on that trade. Next, Linde PLC. Linde PLC is a nice stock, long-lasting uptrend, but lately we have seen a sideways consolidation after the break of this uptrend. Since then we had struggled to make a new all-time high, and I got a setup. Buy stop would have been a new all-time high, stop loss below the 200 moving average, but we have crashed a little bit to the downside in the mid side of this sideways range, so I will probably move that one to my secondary watch list and inform you if something interesting again happens in this stock, and then I will probably take the same setup and with similar marks, but at the moment it's getting a little bit interesting as long as we're moving to the south. Next, Toyota Motor Corporation. Yeah, we had a prior all-time high, a massive decline since then, bottom formation building inside the sideways consolidation. We struggled to break higher. Once we did, we directly collapsed lower. After here also a sideways movement, and my plan is to get long after exceeding this prior highs to the upper side. Stop loss was placed initially below the lowest point. Now the lowest point moved even lower. We could adjust that one now below this point at the 200 moving average, but for my part I will let it like it is, because I think if we want to surpass that prior highs, we will go further to the north, and a fall below this level here is unlikely in my opinion. But if you like it more conservative and more like in textbooks, you can also place your stop loss below the 200 moving average, but then you would also have to increase your take profit target to get to a 2-to-1 risk reward ratio if you want to do that. It's not written in stone. You can also place your stop loss at the prior all-time high level, would also be fine, but for me I stay with it like it is. Next, Applied Materials. Applied Materials Inc. also uptrending stocks with huge volatility and declines in between. We had that huge over decline. We have seen the breakout, the retest, and the break of the retest to the other side. Then we found here support at the prior high and then collapsed lower. If you measure that one from the low to the high of this secondary movement, you got the Fibonacci retracement level and price stopped exactly at the 0.618 Fibonacci retracement level, which is a pretty significant one and nice for such pullbacks. We have been also able to draw here in 4-hour support zone. From there one it bounced after getting above the 200 moving average. I went long and riding that one since then higher. Stop loss below the 0.618 Fibonacci retracement level and the 4 support zone, risking 0.5% of the account balance to make 4 times my risk this time, a little bit more because the stop wasn't far away from my entry level, and I'm using for my take profit the secondary Fibonacci extension level, which is below the prior all-time high. Next, ASML. ASML Holdings looking a little bit similar, uptrending but huge declines in between. We had a huge decline, we had a breakout to the upper side, a corrective move near the 200 moving average, and then exceeding this corrective move after the break of the major downtrend to the upper side, and I entered a long position which worked pretty well so far. Stop loss below this reset here, retest, and aiming here for a 3-to-1 risk reward ratio with staying below the first Fibonacci extension level. And yeah, that would be pretty nice to bank that profit in. And yeah, next we have the stock I am not able to pronounce, Xylem Inc. Xylem Inc. is an uptrending stock which had problems around this area of $140 per stock, but the lows have been higher and higher and higher, so they have been uptrending, and once such a structure breaks then to the upper side, that's normally bullish, so I went long, stop loss below this daily support zone here, and I'm aiming here for 2-to-1 risk reward ratio and placing that take profit below the second Fibonacci extension level measured from the low to the high of the prior major movement. Next, Viper Energy. Viper Energy Inc. had a major resistance zone that once broken turned support. Weekly uptrend is nearly intact. We are a little bit below that one right now, but this daily downtrend is broken. We still above this weekly support zone, so a break higher would be bullish, at least in my view. Because of that, I have here a buy stop order that once we see this sideways consolidation break to the upper side significantly, probably also above this 200 moving average, I would enter a long position, take profit below the prior all-time high, stop loss below the lowest point of the current movement. Not sure if that one get executed or we drop all the way lower, but that's the game. Some setups don't work out. Next, MSCI India. MSCI India ETF, long-term uptrending, corrections in between, and we had here also corrective move. We have a break above it, higher low, and then from there on it continued higher. We got a secondary retest of this broken downtrend. We have seen a magnetic divergence in price, a broken daily downtrend line. And once we have exceeded point B of the ABC correction, I went long. Afterwards we declined directly, and I believed already that this position is that and would trigger my stop loss, but then it turned right before that, and we are right now slightly above my entry level again, and I hope that we'll from there on ride that trend higher, supported by that one moving average. Aiming here also for 2-to-1 risk reward ratio, take profit slightly below the prior all-time high. Next, MicroStrategy. MicroStrategy, or now only strategy, ain't looking so good because of a weak Bitcoin right now. And we have since a long time consolidation time in MicroStrategy. Even Bitcoin made new all-time highs. We are in a downtrend right now. I can delete that setup right now because I don't think that we will see directly here a breakout to the upper side. We will probably retest the lower end of this range before then we maybe see a break to the upper side again. At the moment I'm a bit bearish on Strategy Inc. That could change in a minute if Bitcoin crashes to new all-time highs. But so far everything below the 200 moving average, uninterested in taking long positions. I will move it to the secondary watch list and inform you if something interesting happens in that stock. Next, BYD. BYD just broke out of a long-lasting sideways consolidation to the upper side. Now we have a huge retest of this breakout level. The moment 200 moving average is more resistance than support. The daily downtrend line is broken to the upper side. Even we have seen intraday a violation to the downside. I will count in this case probably only the closes, so everything stays like it is. Buy entry would have been or it would be above $15.67 per stock. From there on I would ride the prices higher if we get a trigger, and aiming for 2.5 risk reward ratio, staying with that below the first Fibonacci extension level, stop loss below the lowest point of the movement or nearly the lowest point at the moment, risking 0.5%. Ethereum, the second largest cryptocurrency. Yeah, we have seen slightly new all-time high. Since then, corrective move lower to the prior weekly support zone and slightly dip below it, but the daily uptrend is still intact, which is bullish. We have here a declining secondary daily white dotted downward line, and I think once that one gets broken to the upper side, and these two highs here getting taken out to the upper side, a long position would be pretty sweet. Stop loss not below the lowest point anymore of this movement, but still a lot below this weekly support zone, so the trade stays valid, at least for me, aiming for 2-to-1 risk reward ratio. And I think that's realistically if alt season kicks in crypto. And yeah, waiting for that one to get confirmed, but that could take a couple of days or even weeks. We will see. Next, Ripple against US dollar. Ripple once looked as bullish as Ethereum, and the trade setup was also similar. But yeah, in comparison to Ethereum, Ripple lost its uptrend significantly and stays also below the 200 moving average, which is bearish at the moment. So I had to adjust this downtrend here. It looked even bullisher than Ethereum before that, but that changed right now. And yeah, as long we stay below that, I stay first bearish for Ripple. Once we see the break above this downward line, it could get interesting again. I will inform you if that's the case, but for now I will move XRP into my secondary watch list. Next, BHP. BHP group in an uptrend above the weekly support zone. We had seen retest of this weekly uptrend line, then a break of the downtrend to the upper side, a corrective move stopped by the 200 moving average that's acting as support. We surpassed the corrective move to the upper side. I went into a long position, still at the entry level, and slight loss here. Stop loss risking 0.5%, placed below the 200 moving average, and take profit target is 2-to-1 risk reward ratio, far away, slightly above the prior all-time high here. Next, Gillette Science. Gillette Science on the daily time frame. We could argue that we are seeing here a cup and handle formation on a bigger time frame, the weekly one, with that being the cup, and here that could develop as the handle. And if we zoom in, we got another handle, a short-term handle on the daily time frame, handle or cup and handle. The handle is already broken to the upper side, so you could get already in a long position. For extra confirmation, I'm waiting a little. I want to see a little bit higher prices above the prior all-time high level, but we slightly exceeded the prior all-time high level already. So yeah, bullish for Gillette Science. I will enter the trade a couple percentages higher, stop loss below the handle and this daily support zone, risking 0.5% for 2-to-1 risk reward ratios, staying with the break profit slightly below the secondary Fibonacci extension level. Next, EOAN. EOAN was operating all prior resistances to the upper side, since then moved nicely higher at the moment in the sideways range. The interesting stuff for this trade at the 4-hour time frame. Here we can see an head and shoulders formation, with the neckline being the 200 moving average, or this 4-hour support resistance zone. We broke above that, entered the long position, stop loss below the 200 moving average in this 4-hour support zone, aiming also here for a 2-to-1 risk reward ratio near the all-time highs. And yeah, at the moment it's ongoing, unspectacular, and yeah, we will see how it ends. Next, Aflac Corporation. Aflac Corporation, a long-term uptrending stock. Lately we have seen a price channel that's slightly moving to the downside. That one got broken to the upper side. That was the reason for me to get in a long position. We have seen now a decline back inside this range, but so far we are still above the 200 moving average. Below that one is my stop loss with 0.5% of my account balance at risk. I'm aiming also here for a 2-to-1 risk reward ratio, staying below the first Fibonacci extension level. At the moment in a huge loss. Yeah, maybe we'll get taken out here and we have to realize that loss. That happens sometimes, or we turn and the possibility is still there for a happy end in this position. Next, WR Berkeley. WR Berkeley Corporation, long-term uptrending stock, went in lately in some resistance. That one got broken to the upper side. Uptrend still intact. Stop loss placed below this uptrend and entered long, aiming for 2-to-1 risk reward ratio, staying with the take profit below the secondary extension level. We have seen the pullback right now. Hopefully that recovers right here and continues higher again. Next, Constellation Energy. Constellation Energy Corporation, long-term uptrending on the daily time frame here. We had lately also here some support or resistance. Price hasn't been able to break above it. You could argue to see here the cup and here the handle formation. We have seen a breakout to new all-time highs. I entered a long position, stop loss below the prior major lowest point here, aiming for a 2-to-1 risk reward ratio. Yeah, at the moment in a smaller profit, running in the right direction. Next, Vertiv Holdings. Similar situation at Vertiv Holdings, but here we don't have the cup and handle. Here we have the head and the shoulders formation with the neckline being this daily resistance zone that once got broken, now turns support. We are in a slight profit in a position, stop loss below the last major point here, and we are also aiming here for a 2-to-1 risk reward ratio. Everything nicely ongoing right now. Next, European stocks. Here the index is tracking the largest 50 European companies. We are in a nice intact weekly uptrend. Pullbacks in between. Every break above the prior all-time high was a nice candidate for going long. So I did here. I ended long after this daily resistance got taken out to the upper side. Turned afterwards support. At the moment in the slight profit. Stop loss below the last major low and the 200 moving average. Aiming also here for a 2-to-1 risk reward ratio, staying with that slightly below the secondary Fibonacci extension level. Next, SMA. SMA Solar Technology, a smaller German company. We had huge declines in between, but all they have in common is this weekly support zone. From there on, we recovered always to the upper side. At least that was history, and I'm betting on history pretty often. So I want that this sideways consolidation resolve itself to the upper side. Then I would get in a long position, stop loss below the lowest point of the prior movement, aiming for a 2-to-1 risk reward ratio. Would the take profit wouldn't be that spectacular in comparison to what price did in the past. Next, Siemens. Siemens long-term uptrending here as well. We have seen an all-time high, corrective move, try to get another all-time high, failed, and the second attempt was successful. I entered a long position, stop loss below the prior major movement, near the 200 moving average. At the moment we have seen corrective move, retesting this support zone that once was resistance, now turned support, or hopefully turned support. And I'm aiming also here for a 2-to-1 risk reward ratio, staying with that below the second Fibonacci extension level. Next, our newcomer, Schneider Electric. Schneider Electric, yeah, pretty energy technology heavy. The last 3 positions here, long-term uptrending. We had a nice corrective move, and it's reminding me at investor AB. 200 moving average was resistance, now turns support. Downtrend is broken to the upper side. I have seen here a smaller corrective move, and I entered after seeing on the forward time frame point B getting taken out, and a long position, stop loss below this daily support zone and the 200 moving average. So pretty conservative stop loss placement here, risking 0.5% of my account balance, aiming for double the amount. Take profit placed below the first Fibonacci extension level. That's all I have for this weekly update on the financial markets. I hope you enjoyed it and got something out of it. We will hear and see us probably next time. Till then, read the charts, manage the risk, and master your mind. Bye bye.